There is a formation of technical analysis on the Bitcoin chart right now that is so good. I need to walk you through it. It is literally a once in a month, summer, week opportunity for a swing trade that I believe could be very, very strong and very predictable. We're going to cover that in this video, as well as we're going to cover just the macro market trends that we've been covering every video of mine, as well as we're swing trading a 10K public portfolio into taking profits and injecting those into long-term investments and assets. I'll show you where that portfolio is sitting, and then we're going to spend the bulk of this video covering this Bitcoin position. So the first thing we're looking at here is a chart of the S&P 500, and we have the NASDAQ. This is the weekly chart. Last week we had this big red candle. If you were in the markets, it was pretty painful, and we've said that if we break below the wick of this candle and start to get structure, we're likely that's going to set the structure for the coming days and weeks. And so if we break below it, or if we close above it, that's going to pretty much set that trend. We've been trading in the middle of it all week, so the next trend has not been solidified yet. But the fact that we rejected the 10-day moving average, this gold line, last week, and we rejected again this week and bounced up, is starting to give me confidence that we're likely going to see some bullish activity next week. But we could just chop sideways and stay in this candle until the market's kind of decided which direction it's going to go. In the public portfolio, we've taken a couple positions. About 90% of that portfolio, that 10K, we put into Duolingo. A couple videos back, I explain in detail the financial statements, income statements, balance sheet, why we're in Duolingo, where we think the trade is going to be, where a stop loss is, where a take profit is. If you've been following along, awesome. If you've been getting in it with me, in my entire watch list right now, Duolingo is the #1 stock today. So that's awesome. We've made some money there. But today we're talking about Bitcoin. So we're going to go to Bitcoin daily chart right now. You might have to pause and take some screenshots throughout this video, or watch it in slow motion, because the concepts we're going to be talking about today are quite complex. But I'm going to run you through exactly how I'm looking at this trade, and I'll show you what I'm seeing, and then if you want to follow along, I will definitely be trading this if this formation actually comes to fruition. So the first thing that we're going to be talking about is Elliott wave theory. If you've never heard of Elliott wave theory, it is a form of technical analysis that you can do on a chart. It attempts to predict the market trends by identifying repetitive patterns in prices. So really what this is it is a technical analysis that has been developed over the decades in the market that essentially predict investor psychology that shifts between optimism and pessimism, and I'll show you exactly what that looks like. So the first thing you're going to do is you are going to click up here on your Fibonacci's. You can bookmark these two or favorite them, but we're going to go down to patterns. Elliott impulse wave. We'll bookmark that one too. This is a new trading view for the channel. So you got Elliott impulse wave 1, 2, 3, 4, 5. You're going to mark out these last 5 points on these 3 waves. So you're going to start at the top. That was Monday the 6th, October 2025. We're going to go down here, up to the top of this candle, down to the bottom of this candle. As you can see, it almost looks like a staircase. So we have 3 waves here, one being the top of the wave, or bottom, I guess in this case, because we're headed down, 3, and then 5. Here are my rules that I follow when identifying an Elliott wave. So rule number 1 is that the bottom of the first wave, so this point 2, cannot be higher than the start of our first wave. So you can't have 2 be like up here. That doesn't show like a descending staircase. So we can validate that. That is true. The 2 is below the 0. The second piece is that the 1, so the top of the first wave, and the bottom here in between, the 4, should be relatively equal on the chart. Now, I know there's this one wick of this candle right here that extends quite below, but if we were to find an average, which is like at the bottom of that candle, and same thing here, I'm going to zoom in a little bit. As you can see, the 1 and the 4 are in a very similar spot. They're both sitting kind of right at the bottom of these candles, right at the top of these candles. So it also validates that. How do we get rid of this? So, Elliott wave, we have our 5 points, we have our 3 waves. We can confirm in the way I trade that when I look at this chart, that this is the style of wave that I want to trade, that I've traded a lot, and I've seen a lot of profit come out of this. The next thing that we're looking for, now we can't predict what's going to happen with Bitcoin, but if the next steps happen, that is what is going to solidify the fact that we take the trade. So this is what I would need to see happen to take this trade. We want to see at some point Bitcoin is going to turn and it's going to start heading back up. It's going to rally in some fashion. It's not just going to go down forever. Now we don't know how deep this wave is going to go. This wave could still come down deeper here. We don't know. Right now the bottom of the wave is right here. We'll see if it actually starts to change trend. But what we'd be looking for is the wave to start heading back up, find a top somewhere, and then start coming back down. This is the setup we're looking for. So we're going to watch Bitcoin over the next week here to see if we do start to get a rally back up, if we do have a top of another wave, and then the wave starts to retrace. If this happens, we are going to go to a tool called fib retracement. You're going to click fib retracement. You're going to start it at the bottom at 0.5 here, and you're going to bring it to the top of this wave that forms. Now, you're going to do this on your chart. It's going to look very different than what I just did on my chart because I've changed the settings on my tool, on my fib retracement. So you can go up to settings here, and if you want, you can copy my settings. I turn the transparency completely off on my trend line. I only toggle on the top 4 and the top 3 toggles in each of the left and right column. I turn on 50% transparency and turn all of these charcoal except for the 0.618, which I'll just put as green, and you can keep it however transparent you want, but I want it to be quite visible. We'll go over why the 0.618 is a buy in a few minutes, but if the wave comes up, we mark the top of it, and comes back into this green zone, that is where we're going to buy with conviction for a swing trade. Now, how we're going to actually map out our trade is we're going to click on trend-based fib extension. You're going to do a similar exercise here. Start it at where the 5 is. Come up to the top of the wave. And we're going to bring it back down to the bottom of the 5. This is default. I haven't changed any settings on here, so it's going to look pretty colorful, just like mine. Yours should look the same. So, why are we buying at the 0.618? And I'm going to show you why these levels, 1.618 and 2.618, are also quite important. So, mathematically, over the course of the stock market, a lot of intelligent people have been trying to map out and chart patterns. These points, the 0.618, the 1.618, and the 2.618, they represent natural exhaustion limits of the market. So essentially, these waves tend to map out where investors get most exhausted, where the price then changes direction a lot of times. And so that's why, just historically, this is what it's been. A lot of people use these charts now, so some of it also just kind of comes to fruition because a lot of people are looking at these charts in this way. But these are the natural exhaustion limits. So we're going to buy here at 0.618 when the market starts to exhaust and look for a rally that comes up. And these two markers would be our take profit zones. So what this trade would look like, you can click over here and click on long position. We'll bookmark this as well. So say we enter the trade right when we hit that green line. Hypothetically, if this is how the formation happens, we put our take profit up to the top. So our profit is going to be 20.6% if we hit this entire trade. And we're going to set our stop loss just below the bottom wick of candle 5 here. So we could lose on this trade. What is the risk reward ratio is 3.76, so we could lose 5% on the trade. We could gain up to 20% on the trade. That is a good trade to me. I'm willing to, that means if we get 1 in 4 trades right, we break even, but I've seen more than a 50% win rate on the setup. So this is, and the setup's quite rare, and that's why, you know, everything's just falling into place perfectly. What we'd realistically do is probably take some profits off the board at the first exhaustion point, 1.618. So at 10% profit, we'd take some off the board. We'd set another stop loss, quite shallow, and then we'd let the rest of our remaining money just run into oblivion and close out, and we could kind of bump up our stop losses as it continues to climb up. So that is the trade that we're looking for. This is the setup that we're looking for. I know that was a lot. I know that was complex. I'm very excited because this is very, very rare to see this setup. Now, we still need to confirm this setup. So for this to happen, we need to see Bitcoin at some point, this last wave, to exhaust, to have a pullback, to retrace a little bit, and then hit our buy zone. So what we need to do is follow this for the next week. So stay patient, keep some cash on the sidelines. This is something that, you know, if it does form perfectly like we just mapped out here, I would actually probably put in a bit of leverage into my position because I'd be so convicted on this position. Now, what can make or break this, of course, there are risks like the macro trends in the market, going back to the chart of the S&P 500 here, going back to the weekly chart. Again, if the whole market starts to drop down and close below this giant candle we had last week, then we can't make this trade because the entire market is basically against us. So even though the setup's perfect for Bitcoin, the market's against us. And Bitcoin right now, I believe, has about a 60% correlation to the market. So the market's doing well 60% of the time. Bitcoin's doing well and vice versa. So that would invalidate our trade. So we do have to keep a pulse on the macro trends, as well as we'll be watching the Bitcoin daily chart on my channel here. Follow along, and then we'll see if we can make this trade happen. For those of you who are new here, when I get 25 subs, we're giving away a 1 ounce Canadian maple, 99.99% silver, silver coin ounce. And so would love a subscribe, like. If you've learned anything, comment. If you have any questions, I know it was complex, please feel free to leave a comment. We can always kind of cover again, step by step, everything we did in detail, and I can kind of break it down into further detail and layers for you. But I just wanted to give you this trade, show you what was forming, let you know we're excited here. And this is definitely something we're going to get into if the formation happens. Really appreciate you all, and we'll talk soon on my next video.